Hi there, welcome to Kneppy Invest and welcome to March 14, 2025. There's about 16 minutes left of trading, not only today, but this trading week. And we've had a pleasant surprise today. Our market is up, long due, I'm going to say that. I haven't been expecting a bit of a bounce because we were significantly oversold. And when I woke up this morning and saw most of the major American indices down by between 1% and 2%, I thought, here we go again. But we've gone against Wall Street and we've had that bounce. And it's been a good bounce, particularly in small caps and mining. Tech, not quite as good, probably because NASDAQ was down a fair bit overnight. Okay, so the agenda of today's video is we'll go through the ASX today, look at the best and worst performing sectors, indices, and also companies. I'll briefly chat about this particular article. Is the ASX 200 about to crash? There was something interesting within this, which I do want to mention. And then we'll have a look at the top 5 stocks of the day. And what I've noticed today is there were heaps and heaps of small cap mining companies release their half-year accounts. I was surprised how many companies released their half-year accounts today. Maybe this is, they had to by the end of trading today. I don't know, but a little bit surprised then. Very few of them were marked price sensitive. That's why I didn't see any this morning. Anyway, so I do or have included a few companies that did release the half-year results in the top 5 stocks. And then we'll go and have a look at some of your comments and questions. I am planning after this video to record a chart of the day. 2 companies, A2 Milk and a Drone Shield. Both of those companies' charts look pretty good. So I wanted to record that video after trading had finished for the day. Okay, so before we have a look at the ASX today, let's talk about this particular article written by Carl Capo-Lingua and released on Wednesday, 12th of March. That's a pretty good article talking about the previous crashes or that sort of thing. And it's really a technical based article because he's a chartist and he's just trying to point out what you need to be looking for when you look at charts. And he did go through his history, how he lost a lot of money in the tech crash back in 2000 and the 1998 Asian crash as well. And then because he lost a lot of money, he changed his the way he changed the way he grew and protected his capital. That's probably the most important thing. Anyway, so he's talked about the 1973 oil price bear market. Also talked about the 1987 stock market crash, 2000 dot-com crash and bear market. And then he pivoted and he really focused on technical analysis to protect his capital. 2007 global financial crisis bear market. Now, one of the reasons he said he changed his philosophy was all about protecting his capital. And in my opinion, that is one of the main goals as an investor. So the 2 main goals as an investor is to grow our capital and to protect that capital. Now, as we move through our investing life, our main priority actually does change. So when you start investing as a 20-year-old, hopefully, I wish, by the way, I didn't start investing as a 20-year-old. The main goal there is to grow your capital because you don't have much. Well, you shouldn't have much. But as you get older and older and as your capital grows and grows, you near retirement, the main priority at that point is to protect your capital. You don't really care about growing your capital once you're 70 years old. It's about protecting your capital and probably getting income from that capital as well. And I'm at the point where I'm probably a little bit more rather protect my capital that I've built than significantly grow my capital over, a few years. Anyway, so he does talk about that somewhere in here. Not sure where he talks about it, but he definitely talks about it. He also talks about the old BHP technique, buy, hold and hope and pray, which is what a lot of the experts tell you you should do. Just buy, hold, hope and pray, that sort of thing. You can't time the market, they tell you. Well, it's not about time or perfectly time the market, but if you have a look at all the major crashes, if you looked at technical analysis, you can get out, take most of your cash out and you will save a lot of your capital, protect a lot of your capital. Anyway, so pretty good article there from Carl. Pretty good article from Carl. I do watch his video. He does release a video every week, technical analysis video, and I highly recommend those videos. Now onto the ASX today. And again, a pretty good day on the markets. Everything is up. We have about a few more minutes left in normal trading, 1 minute and 30 minutes left, and then we'd go through the closing auction. And yeah, it's been a really good day. No complaints from me. Tech was down for most of the day, interesting enough, and we have seen a little bit of rally in tech during the last hour or so. Maybe American futures are up. And if we have a look at the sectors, utilities, really good day. Materials, a really good day, led by gold. Iron ore, I think, had a pretty good day. And tin. Tin had an absolutely fabulous day. If you bought any tin companies, tin miners, you've had a pretty good day as well. And the major tin miner I know of is Metals X. And the share price of that company is up over 20%. So I'll talk about why in the top 5 stocks of the day. Hint, hint. Top stock of the day is Metals X. So a pretty good day for mining, with gold having a stellar day, up 3.95%. But a really good day for industrials and IT, even healthcare, up 0.56%. And a negative day for financials. So still a little bit of weakness in the banks. That is a little bit surprising to me. I thought maybe we might see a rally in the banks. And ASX 200 banks down 0.47%. And even the ASX 20 only up 0.22%. So again, all these investors who have rushed into the ASX 20 to protect their capital because it's defensive are seeing the problem with that, because, again, banks are defensive. Banks are not defensive. They are cyclical. And if we do go into a major recession, you're going to see the bank share price drop a lot. Drop a lot. Okay, so let's have a look at the ASX 20. 14 companies up, 6 down. I would say 3 of the major banks are down. Maybe one's up. And we can check that right now. So Woodside's down. There's CBA down 1.33%. Westpac's down. Goodman Group, Aristocrat, and Woolworths. No, we have 2 of the major banks down, 2 of the major banks ups. And those, the 2 major banks up are ANZ and NAB. Look, this makes sense. I would say ANZ is probably the cheapest of the banks, maybe NAB coming in second, and definitely CBA is by far the most expensive of the banks. And I wouldn't be surprised to see a little bit of rotation out of CBA into some of those cheaper banks. Best performing ASX 20 company today, Fortescue. No surprise there. 3 of the top 4 here are iron ore companies, Fortescue, BHP, and Rio Tinto. I did read something that iron ore had a pretty good day, and we can check that. We can check that. If we have a look at where's iron ore? There it is. Yeah, it's had actually a couple of good days in a row, iron ore. Nothing like tin, though. Nothing like tin. Okay, so let's turn our attention to the top stocks of the day. This is by percentage change, and you'll notice near the top is Metals X. Share price up 23.85%. And just below Metals X is Race Oncology, up 23.79%. I will discuss both companies in the top 5. In fact, they have come in number 1 and number 2. So in fact, Metals X has a market cap of 598 and Race Oncology 221. In fact, Metals X has a pretty good year, up 82%. Go Metals X. Good work, Metals X. Other than that, I didn't really look at anything else here. Wide open agriculture, share price has been on an absolute tear. They did receive a price and volume query from the ASX. I did not have a look at it because they just released a price-sensitive announcement not that long ago. So I'm not sure what the ASX is thinking. Yeah, so they released only 4 days ago, these new sales in Europe, Latin America, and Australia. And then they received a price and volume query. Come on, ASX. Come on, don't be stupid. And let's open it up. Why not? Let's see what wide open agriculture has to say. And I'd love it if they said, you're being stupid, ASX. We just released a price-sensitive announcement not that long ago. But they haven't done that. They've just done the worst type of response, saying there's nothing. So this is like the worst ASX price and volume query that you can see. There's nothing there. Nothing of substance. Anyway, so we can move on. And that's it. Yeah, Drone Shield, again, we'll be doing the chart of the day featuring two companies, Drone Shield and A2 Milk. So Drone Shield up 13.9%. And if we have a look at the top gainers by market cap, who's at the top of this list? The A2 Milk Company. Share price up 8%, and their chart looks pretty good as well. I'm a little bit worrying about the valuation of A2 Milk. I think the market's probably getting a little bit ahead of itself. But anyway, Liontown Resources coming in number 2. They did release results, and I have included this company in the top 5, coming in number 3. And then further down, oh, there's Mika Metals. Go Mika Metals. If you do follow my channel, you know why I'm saying go Mika Metals. And that's it. There's nothing else to talk about in the top gainers. What about the top losers? Okay, so at the top, we have two companies. Green Technology Metals, I'm pretty sure they did a capital raising. I'm almost 100% certain. No, you can never be 100% certain. I'm going to say 99% certain they did a capital raising. And there we go. Entitlement offer to raise $4 million. That's why the share price is down. The other company at the top here is Cokal, CKA, share price down 21.57%. That company is in my top 5. Coming in number 4, by the way. Coming in number 4. And they did release a half-year results. And interesting to say the least. And you'll know why when I discuss that company in like 5, 10, 20 minutes or so. Other than that, nothing much else here to discuss by percentage change. What about the top losers by market cap? Vulcan Energy, Chrysos Corporation. I did have a look to see if they released anything today. Nothing. AMA Group, that is a company I was trading. I got out because it hit my sell price, and I think I'm happy about that. Let's have a look at AMA Group's chart. This is probably why you need rules. You need to follow your rules because share price looked like it was moving into an uptrend, and then the uptrend really stalled in November last year, and then I got out just after that. And the share price has dropped quite a bit since then. I might get interested in this company if it drops to like the mid-30s, which is the lows we saw back in June. But the chart is starting to look pretty bad for AMA Group. And what else do we have here? Nothing I want to speak about right now, anyway. Okay, so let's turn our attention to the top 5 stocks of the day. Actually, before that, yeah, I just actually opened up, happened just before I started recording, and I couldn't come up with the top 5 stocks of the day. I was really struggling. In fact, I was going to include A2 Milk and Drone Shield in the top 5 just because of their charts. And then I opened up the announcements just to see what announcements, price-sensitive announcements, were released over the past 3 or 4 hours. And I just did not filter it. And the first thing that popped out with the unfiltered announcements in ComSec is the amount of half-year reporting accounts being released today. It's just a massive amount. And there's a chance I might have missed quite a few of these over the last few days. So obviously these are mostly small cap mining companies. Not all of them, but most of them seem to be small cap mining companies. And this is not a surprise because then I thought about it and went, yes, we didn't see many small cap mining companies release their half-year accounts during February. Yeah, it makes sense now why they're all releasing now. So they definitely have a different timetable. I'm not sure why. This is something I might pursue during the weekend if I don't forget. But a lot of half-year reporting accounts, and none of them are market price sensitive. Maybe 1 or 2 are. But I did look at the market sensitive, and I noticed there was a few presentations here, like Hastings Technology Metals, a half-year results presentation. There was another one here somewhere. Oh, it would have been Liontown. Yeah, Liontown, half-year results presentation. But there was no half-year accounts, which are usually marked price sensitive. So, yeah, obviously a lot of these announcements were released today. Now, most of these are small exploring mining companies, and I don't need to have a look at their half-year accounts because they're not making any revenue. It's pointless. It's just pointless. But Liontown Resources, yes, that is one company I want to look at because they're into production. So that's the one reason why Liontown is in my top 5. Plus, share price is up 5.69%. Other than that, oh, here's another one. Yeah, where was it? No, sorry. For some reason, I thought Black Cat was another one, BCB, very close. It's BC8 Black Cat. But the other company in my top 5 is BCB, which is Bowen Coal, something like that. Anyway, so Let's turn our attention to the company coming in number 5, which is Bowen Coal. Talking about Bowen Coal. Bowen Coking Coal. Share price, 0.5 cents. Massive turn off for me. Share price below 10 cents. Not only that, the company has, was it 10 billion shares on issue? I'm thinking, yeah, 10 billion. Company has 10.78 billion shares on issue. This is a company I would avoid at all costs. However, which is a great word because you're changing tact completely when you say the word however. However, I notice a company is doing a consolidation. So there was this announcement released on the 3rd of March. Consolidation split, BCB. They're not doing a split, I can tell you that much. They're not going from 10 billion shares to 100 billion shares. So it's a 100 to 1 consolidation, which means the shares on issue will go from 10.7 billion or whatever it was down to 107 million, and the share price will go up to 50 cents, which is not bad. That means all the pip traders will be pipped out. I can see, yeah, you can just see this is a pip trader heaven. And you can just see the trade history. So share price, you'll notice all the percentage change, either down 17% or up 20%. That's because share price is going up or down by 1 pip. And you can see that time and time again. Yeah, or there's one down 14%. Oh, that's when the share price went from 7 or 0.7 cents to 0.6 cents. Yes, so yeah, these are sort of companies I have no interest in because where the share price is. But now they're doing consolidation, I might have more interest. So let's have a look at the company's half-year results. They also released a media announcement or media release, and that itself was not market price sensitive. BCB, or Bowen Coking Coal, delivers significantly improved half-year results. So what I'm going to do is have a look at the half-yearly report and accounts. The first thing I always do is have a look at revenue. Here it is, revenue. And the company had $181 million of revenue. So this company is a real company. They're producing something. Now, the revenue was down a fair bit from last year. But the concerning thing here is the company is loss-making. In fact, last year, the loss was $65 million. This year, it's only $8.7 million. So, yeah, the performance of the company has improved, but they're still loss-making by a fair bit. So the next thing I always look at is, where is it? Here it is. So this is the real profit loss statement. And I always compare the revenue to operating expenses. And the reason I do that is it might become clear when we look at Liontown, or what's the other company? Another company I'll be looking at the half-year report. If a company's expenses or the cost to get the commodity out of the ground is more than the revenue, my question would be, why are you mining? It's just pointless to mine. You shut down the mine. Anyway, I'm not expert in that, but they're the ones making the money. Management is they're making money to make those decisions. Anyway, they also, so if you have a look here, $195 million in revenue, $113 million in operating expenses. So they do spend a lot of money in other stuff like a depreciation and amortization, $22 million, royalties expense, $22.6 million, and other expenses, $20.8 million. You can look at notes. So other expenses, that is notes 5. So you can see what other expenses means. But they were loss-making. The other interesting thing here, they would have been loss-making because they had an operating profit if they didn't have debt. So finance expense, $31.8 million, finance income at $19.4 million. So obviously they have a little bit of cash, but they have a little bit of debt as well. And you can see that debt if you have a look at the balance sheet. Here we go. This is the balance sheet. So at least equity is $75 million. It's positive, up from $9 million, by the way. So nice increase in equity. The reason that is important will become clear when we look at the company coming in number 4, which is a little bit more of a concern than this company. Anyway, so debt. So interest-bearing loans and payables, $28 million in current liabilities and $101 million in non-current liabilities. Now, because they have a lot of debt, by the way, the market cap of this company is only $53 million. So because they have a lot of debt, now the cash is $54.4 million, so they have increased their cash, but they have increased their debt as well. Did they increase their debt? No, actually they decreased their debt by a fair bit. I wonder if they did a capital raising. Or they did, yeah. They did a pretty big capital raising because issued capital went from $330 million to $404 million. Accumulated losses up to $335 million. Yeah, so if a company keeps increasing the accumulated losses, that means the issued capital needs to increase as well. That is what has been happening to this company. Anyway, so they have a fair bit of debt, and definitely net debt is quite high at about $60-70 million, and that's probably too much for me. Okay, so and the other thing I like to look at, of course, is the cash flow statement. Operating cash flow positive by 15.6 million, but they did spend 22.2 million on property, plant, and equipment, which is capital expenditure, which means the company was not free cash flow positive, still burning through cash. And yes, they did do a capital raising, proceeds from issue of shares, 48.9 million. Now, the next thing I always look at when it comes to these companies, there's a few things a bit dodgy here. I wouldn't say dodgy, but a few concerning things. They are free cash flow negative, operating cash flow positive. They have a fair bit of debt. They aren't unprofitable. So the next thing I always look at is going concern, which is found in note 1. Here it is, going concern. It's usually found near the top. And I'm just having a look at the language here. What are they saying? Okay, so this is what it says in the going concern. The group's ability to continue to generate operating cash flows, not a lot, to meet its financial obligations is based on the performance of its operations and those of the mining contractors, as well as the timing and price received for coal shell shipments. The directors, in the consideration of the appropriateness of the going concern basis for the preparation of the condensed half-year financial report, have prepared a cash flow forecast through 31st of March 2026, which indicates that subject to the successful restructure of its debt and other liquidity measures referred to below, the group will have sufficient cash to continue as a going concern. However, so we know there's something going to be sort of going against that grain of thought. However, should the group be unable to restructure its debt and should there be adverse impacts to coal presentation or performance from the mining assets due to significant weather or market supply shortages in labour or equipment, the group's available cash to meet its ongoing commitments may be materially impacted. So there is still a lot of risk when it comes to this company. That's what I take away from that. So going concern is really good to go through. I like going through this, maybe not for all companies, but definitely for companies like this. Should the group be unsuccessful in achieving the matter set above, a material uncertainty would exist that may cast significant doubt on the ability of the group to continue as a going concern. Okay, so that's Bowen, Cokal. So let's have a look at the chart. BCB. I have no interest in this company, but it's still interesting. And the chart is horrendous. Share price not that long ago, 2022, was as high as 42 cents. Now it's 0.5. Share price has dropped from 42 cents to 0.5. So we're talking about like a 99% drop in share price. That's not good. That's not good performance. So again, technical analysis is really important. There has been no reason to be holding this company since the start of 2023 when the share price was 30 cents. There's no reason. Okay, so that's coming in at number 5. We have Bowen at Cokal. The whole reason I went through the financial statements and the going concern is now going to become clear. When we talk about the company coming in at number 4, which is Cokal. Share price down a fair bit, 29.41%. Funny enough, this is the reason why I saw, or one of the reasons why I noticed there was quite a few half-year reports and accounts, because I saw the share price down of this company a fair bit, and they did release a half-year report and accounts. And then I went to the, the ComSec announcement page just to have a look before I started recording, and then I just saw a slew of these reports being released today. So thank you, Cokal, because your share price is down a fair bit. So let's have a look at why share price of Cokal is down. Another coal company. And this is going to show why the going concern is really important. Now, what we'll do is I'll have a look at the financials of this company, and it should be quite clear why the going concern is concerning when we just have a look at the financials. So Cokal, something to do with coal. Anyway, so revenue and other income, 2.1 million. So not a lot. It's a fairly small company. By the way, how small is it? Let's have a look. Cokal probably doesn't have 10.8 million shares on issue, but 1.1 billion shares on issue. Market cap is $39.9 million. That's after the drop today, by the way. So that's after the drop today. So before today, the market cap would have been probably 60 million, maybe not 60 million, 60 to 40, close to 60 million. Anyway, so let's go back to the financial statement. So again, revenue 2.1 million, cost of goods sold 2.2 million. So straight away, this company's not profitable. So cost of goods sold is more than the revenue and other income. That's really concerning. And then a lot of expenses, employee benefits, production expenses, bargain expenses, finance costs, administration expenses, royalty expenses, capital participation fee of 2.4 million, whatever that is. You could look at note 11, by the way. And they had a loss of $6 million. Last year had a loss of 5.3 million. So things have not improved. Even revenue has decreased from last year. Okay, so not a good start for Cokal. Now onto the balance sheet. And this company has negative equity. This company has negative equity, minus 14.6 million. Last year it was minus 8.5 million. I probably would refuse to look at any company that has negative equity. Issued capital, 106 million. Accumulated losses up to $127.5 million. They have not a lot of cash on hand, $252,000 of cash on hand. A little bit of inventory and short-term deposits, but not a lot of assets. The biggest asset is mines under development, 23.7 million. A little bit of properly planted equipment, but they also have $20 million of borrowings, which is a concern for this company. Okay, and cash flow statement. Here it goes. The company actually was operating cash flow positive by 2.5 billion. Hooray, something positive, but they were free cash flow negative by about $800,000. So that, I suppose you could spin a little bit of positiveness in the cash flow statement. At least they were operating cash flow positive, but only $252,000 of cash on hand. Wow. By the way, does this company release an Appendix 5B? They do. I'm wondering, did they mention this? Because in Section 8, if they don't have a lot of cash on hand, oh no, it's based off operating cash flow. So this company is probably operating cash flow positive, and they don't have to answer 8 because of that, even though they're free cash flow negative. Oh no, they were operating cash flow negative by $2.5 million in this quarter. This is really weird. They were operating cash flow negative by 3.8 million in the year-to-date 6 months. That's US dollars, but in the half-year accounts, it's totally different. That's weird. But what do they say in Section 8? Section 8 is really important because it's just assuming if the company burns through the cash as they've been doing, what are they going to do in the future? Are they going, because if they don't have enough cash to operate, then they will just go bye-bye. So what are the plans of management? Anyway, so they have 0.6 quarters of cash left, and they have to answer Section 8.81. Does the entity expect that it will continue to have the current level of net operating cash flows for the time being? And if not, why not? But they said no. The company anticipates generating increased revenue in the upcoming quarters. The company is currently in the process of completing scheduled coal shipments for the first quarter, which is expected to impact positively financial performance. The company has already sold or contracted the sale of 15,000 tonnes of coal in the first quarter and is negotiations to sell another 20,000 by the end of the quarter. And they've also mentioned in Section 8.82 any steps they're taking in regards to cash. Yes, the funding for infrastructure is underway and expected to be completed before February 2025. In addition, funding for expansion of production, including working capital, has been finalised in January and will be received and implemented in the first quarter. So it looks like they do have a plan. Okay, so let's go back to Cokal's half-year report, which is interesting because the operating cash flow is totally different than their Appendix 5B, which is weird because it's the same period. It's the same period. Okay, so here, let's have a look at the going concern. This is the reason why I looked at the going concern for Bowen. This is a little bit different. Let's have a look. Where is it? As at 31st of December, the group's arrears of trade and other payables means its ability to continue as a going concern is dependent on creditors, including management and the directors, extending payment terms, providing informal financial support, and not demanding payment of amounts owed to them in excess of the group's available funds at the time. At the date of this report, no creditor or lender of the group has made demands for payment. Okay, so they are still reliant on I wouldn't say outside forces, but you just don't know what's going to happen in the future. All it takes is someone to make a demand for payment, and that could be it for this company. I wouldn't go that far, but we have seen this happen a lot. A company owes someone some money and they go back and say, we want that money, you owe us, and then they go into administration. I'm not saying that's going to happen to this company, but you do have to be aware of that. Okay, so that's Cokal. So let's have a look chart for this particular company. Am I willing to trade this one? And I think the answer to that is no. Another ugly looking chart. Share price of this company has gone from 25 cents down to 3.7 cents. Not as bad as Bowen, but still pretty negative. And why not have a look at the weekly chart? So yeah, share price as high as 80 cents in 2011. Now, if coal starts going on a gangbuster uptrend, if it goes through the roof, this could be an interesting play, because I would say the gains would get from Cokal or even Bowen coking, whatever it's called, would be significantly greater than the bigger coal mining companies like Whitehaven, New Hope, and Yancoal, just because there's way more, I wouldn't say leverage, but you're going to be leveraged, more highly leveraged to the coal prices, unlike those other companies. But you'll see a pretty good run in those other mining companies, coal mining companies, but you see much bigger gains in Cokal, probably, unless they go bust. Okay, so that's Cokal. Coming in number 3, we have Liontown Resources. Share price up 4. Share price has pulled back a little bit. When I first looked at this earlier, the share price was up 7 or 8%. So I thought, oh, that's pretty good. Another company that did release half-year results. Their presentation was market price sensitive. I might open up both. I'll open up their accounts and their presentation. Okay, so Liontown is now into production, and we discovered something. Well, I discovered. I suppose I didn't discover it. I saw something that I've never seen before. We had, and you'll see that when we have a look at the numbers. Where is it? Here it is. So let's have a look at the companies. Here we go. Companies' profit and loss statement. Sales revenue, 100.41 million. Cost of goods sold, 100.41 million. And I was thinking, is that a coincidence? Is that a coincidence that sales revenue and cost of goods sold are absolutely identical? And I thought, that can't be a coincidence. And it seems like maybe it is. Maybe it is a coincidence. Anyway, so sales revenue, cost of goods sold, almost identical, which means they had zero gross profit, which means all their expenses below that are losses. So that includes corporate administration expenses, share-based payments, a fair bit. Now, the loss was only $15 million, which may not seem a lot, but there was a fair value movement on derivative liability of $43.7 million. So in my opinion, the real loss in this particular half year was $58 million. Yes, $58 million. Well, maybe not 50. I'm just going to see if there was another. There was a foreign currency loss on financing activities. So maybe we can take that out. So I'd say, yeah, $30 million was a true loss for this company. Anyway, so they're in production. Sales revenue, $100 million. Last half year, zero. So let's keep going down. They have a lot of cash, almost $200 million of cash. Now they are burning through that. And they have equity of $758 million. Accumulated losses at $208 million, but share capital at $955 million. So that losses might be coming down if they become profitable, which is exactly what you want to see. But a lot of equity compared to, say, Cokal. And the operating cash flow. This is where it gets interesting. Okay, so they were operating cash flow negative by 36.6 million. So receipts 91 million, 92 million, cash paid to suppliers and employees 135.2 million. So that could be concerning that they were significantly operating cash flow negative by 36 million. Payments for plant and equipment 253.2 million. So they're actually free cash flow negative by $289 million. So cash on hand actually did drop a fair bit if you take away proceeds from borrowing. So they have increased their debt by a fair bit. So debt up to, where is it? So current debt, interest-bearing loans and borrowings up to $360 million, and non-current debt up to $311 million. So they have about $671 million of debt. But mining companies can decrease that debt quite quickly if they really ramp up their mining. I'm not sure if that is the plan for Liontown. I suppose we could have a look at the going concern, but I don't think there's going to be anything in that of concern. Yeah, there won't be anything in here, but it's good to have a look at this, particularly for companies that are struggling. Yeah, don't think there's anything in this. The forecast indicates the group will have sufficient liquidity to meet all commitments and working capital requirements for the 12-month period from the date of approval of this interim financial report. The directors have prepared a cash flow forecast, there you go, which assumes, amongst other things, pricing under several scenarios, including current spot prices throughout the forecast period and the continued implementation of initiatives from the GBOE. Anyway, so let's have a look at the presentation. I'd actually go through this fairly quickly, and I was a little bit confused when I look at this one. Yeah, this one, the half-year numbers. Should I increase the size here? Yep. I'll get rid of that. There we go. And the reason I was a little bit, because it goes through the production, concentrate sales, lithium recovery, stockpiles, revenue, and cash. And then I saw they were operating cash flow positive by 16.7 million. I was thinking, what? No, I just had a look at the cash flow statement and you're negative, and then I completely missed that this was only for the quarter. So they've done some trickeration here. They've put something in that was positive, just looking at the operating cash flow for the second quarter. Ideally, they should have just did it for the half year and then have another slide where they just put in the financials for the second quarter. I think that would have been really good. We can see how much revenue they had in the second quarter, operating cash flow and free cash flow as well. But they were operating cash flow positive in the second quarter. So that's pretty exciting for Liontown Resource shareholders. Operating cash flow positive, yes. Probably free cash flow negative, however. The other thing I like when it comes to these sort of announcements is any sort of, it's down the bottom, I think. Oh, I really like these sort of things as well. Disciplined capital allocation. So anything to do with capital allocation, I really like, because in my opinion, this is just my opinion, capital allocation is the most important job of management, particularly for companies that are profitable. So this is something that might be very important for Liontown moving forward. What are we going to do with the profits the company makes? Are we going to search for new, maybe acquisitions, dividends, share buybacks, that sort of thing? So they're just talking about that. There we go. Shareholder returns through balancing dividends and share buybacks with growth and debt management. They're talking about dividends, share buybacks, and growth would be like acquisitions, and debt management, of course, decreasing. That's another thing they can do with their profits or their cash flow, is to decrease the debt. I would prefer, this is just me because I'm the biggest fan of debt, to decrease the debt. Now, don't have to get the debt down to zero, but just decrease it a little bit. It's a much better, I think it's a much more healthy balance sheet if they do that. Some might say it's a lazy balance sheet if a company doesn't have a lot of debt, but I think that's nuts. That's just me. It's nuts. And the other thing I like is this. So any sort of indication what the company thinks about demand or supply of lithium. I would have preferred some sort of analysis of lithium supply, because demand and supply is really important. We know long-term lithium demand is going to go up. I think that's an obvious. That's really obvious. But what's going to happen to supply of lithium? What is going to happen to supply of lithium? They don't really talk about it at this point. But they do mention at current low prices, new projects will be more difficult to induce. And that's the key. If we keep seeing more and more lithium projects come to production, that won't be good for lithium in the long run, because it'll be way too much supply. And even though demand will be increasing, it's going to take a while before supply meets up to demand. Well, demand meets up to supply. Anyway, so that's like, actually, no, chart, of course, chart. Is this a reason to be excited? Is this a breakout we're all looking for? Now, that's the weekly chart for Liontown, so let's have a look at the daily chart. And unfortunately, no, I'm not there yet. So not really a breakout for Liontown Resources. In fact, nothing going on at all. Share price at about 65 cents, low about 50 cents not that long ago. So yeah, I'm not yet there when it comes to lithium companies. But if I do see some lithium companies starting to move in uptrends, that's when I might get on board, particularly if lithium price is starting to increase. Coming in number 2, we have Race Oncology, not Ferrari. Yeah, that's right. Ferrari has a ticker code RACE. Very clever. Very good. Race Oncology, share price up 21.4%. Now, I will be honest with you, I don't get that excited by these types of announcements, but I can see why the market is a little bit excited. Ethics approval received for RC220 phase 1 trial. The reason I don't get that excited, it's because it's a phase 1 trial, but at least it's a step in the right direction. I do get excited when phase 3 trials are successful. If a company releases that, I get really excited. Hello Neuron Pharmaceuticals back in 2021, December. That's exactly why I bought those shares, successful phase 3 trials. Anyway, so ethics approval received for this particular phase 1 solid tumor trial, phase 1 trial of RC220 in combination with doxorubicin in adult solid tumor patients. I won't say, it's just really interesting. Initiate a phase 1 clinical trial to assess the safety, tolerability, and pharmacokinetics of RC220. What is pharmacokinetics? I'm going to Google that because let's learn something today. What is pharmacokinetics? Sometimes described as what the body does to a drug, refers to the movement of a drug into and through and out of the body. Sort of makes sense, kinetics, sort of the movement. Pretty sure kinetics means movement. And pharma, yeah, that's all I would know. The time course of its absorption, bioavailability, distribution, metabolism, and excretion. There we go. That is pharmacokinetics. What is pharmacokinetics versus pharmacodynamics? No idea. There you go. We have learned something today. Well, I have anyway. You all probably you're all way smarter than I am, so you probably all knew this already. Anyway, so that's Race Oncology. Not the sort of announcement that will get me overly excited. So let's have a look at the chart. Is this a breakout? Which is what I'm looking for in these sort of situations. Is this a breakout? And the answer to that is no. No, in fact, share price has been a downtrend. Maybe this is the end of the downtrend. Maybe, but yeah, I have no interest in this chart at all. Okay, now on to the stock of the day. And the stock of the day is Metals X. MLX. Share price up 22%. It was up a little bit more than that, probably about 25% at the most. You notice they did not release any announcements. No announcements at all. And then I saw the share price was up and I was like, ooh, what's going on here? So then I just Googled Metals X, no explanation. In fact, there was one little article saying, oh, it's just because mining companies are doing well today. Well, not this well, up 22%. So then I thought, well, I do know Metals X is a tin company. So let's have a look at the tin chart. Here it is. No, that's not it. That's silver. Sorry, silver. Tin is SN. And yeah, tin up 8.84%. I was like, wow, something's happened. By the way, this is a breakout. So just put a line right there. I can't. There we go. There we go. So this is like a breakout. This is what I'll be looking for. And I was thinking, oh, something's happened with tin. Something has happened in the tin industry that has caused this commodity to go through the roof on massive volume. And fortunately, in TradingView, all you have to do is just click on this little symbol there. And they have an article from Reuters 15 hours ago. And this is about some sort of tin mine. I've never heard of it. Alpha Min Resources temporarily cease operations at its Bisai tin mine in the Democratic Republic of the Congo due to unrest in the North Kivu province. Now, this particular tin mine provides 4% of global supplies, estimated around 380,000 tons. So no wonder the price of tin is up, because there's less supply now on the market. So again, supply and demand. Now, who knows how long this particular mine will be not in production? It could be one day. And that will be my only concern about this particular commodity. Analysis at Macquarie Inner Notes published this week estimated the global tin market was already to see a shortfall of 13,000 tonnes this year. So you can definitely see why this might be beneficial for Metals X, particularly if they keep this particular mine out of production for a period of time. Anyway, so that's why tin is looking really good right now. So it looks like there's going to be undersupply of tin, based according to who was that? Macquarie. And yeah, so the tin chart looks good. You know what other chart looks really good? Metals X. This chart looks brilliant. This came to my attention. This one actually came to my attention back in like maybe a year ago. Yeah, about a year ago. Share price had moved, broke out in early February and was going bonkers. Then the share price went sideways for a long period of time. And then it broke out not that long ago. Yeah, mid-February. And look at that chart. Look at the volume as well. What a brilliant chart for Metals X. Again, my only concern about this is it's just based off one mine ceasing operations, and that could change within the next few days. And then the share price of Metals X might pull back a fair bit. And who knows, maybe the unrest in this province in the DRC is going to continue for the next 10 years, and maybe the mine will not be in production for 10 years. I don't know. It's the future. Okay, so that's the stock of the day, which is Metals X. And they have gone bonkers because of tin prices. Okay, just one of your comments. So Raven is talking about gold, tariffs. I think the president is shooting himself in the foot. I'm just looking for a very short comment. This one's interesting. Yeah, let's talk about this one. Adam Galizia says, if Queensland coal mines are underwater because of Cyclone Alfred, you think MQ would be forecasting the opposite for coal supply. My first thought was, Queensland coal mines underwater? Now, Alfred was in the southeast, the far southeast. Are there any coal mines in the far southeast? Not many, maybe inland a little bit, but the majority of coal mines in Queensland are further north, inland of the Capricornia coast. So we're talking about the Central Highlands and Coalfields. Central Highlands and Coalfields, it's named, the district is named that. So we're talking about Emerald and all that area. And I'm wondering, I don't think they were that affected by rain. And then I Googled it and I saw nothing about coal mines underwater. Coal mines underwater. Funny enough, I actually did this, and the AI overview said there are currently no underwater coal mines in Queensland. However, some of the mines in Queensland might affect the waterways of the Great Barrier Reef. So I was just really interesting that I, for some reason, thought I was searching for coal mines that were actually had operations under the water, and I'm not sure if there is a coal mine that is or has operations underwater. Anyway, so I just don't think that is right. Maybe I'm completely wrong. Maybe there are some coal mines underwater, and I'm completely wrong. Anyway, so thank you for that comment. You made me think. By the way, you made me think. By the way, I wonder if there is a coal mines in Queensland map. I have a feeling there are some coal mines west of the ranges in like the Darling Downs, maybe the Granite Belt sort of area. I'd love to see if there was a coal mine map. The Bowen Basin, that's it, the Bowen Basin. There's a lot of coal mines in that area. What about this Map World? Oh, you have to pay for it. Oh, wait. How can I go down? I want to go down. Oh, I am not moving this. I am moving it. So yeah, there are some coal mines. Just funny enough, where I've bought some land, there were some really old coal mine tunnels, and they have mapped all those coal mine tunnels. And in the little portion, in the far, I think it's the far east, northeast part of my land, and one of the reasons I got my land, I wouldn't say cheap, but a little bit less expensive than some other land, is because you can't build any structures in the very far northeast. I was like, I don't care. I was not planning on building a structure in the very far northeast area. And the whole reason behind that is because there was a really old mine tunnel just below that area. And the property to my left or right, now there's in between that property and my property, there's going to be a walkway. And it's pretty obvious why they put the walkway there, because there's an old coal mine under there. But that property was huge. And I was like, that's a big property. And it was really cheap as well, comparatively speaking. I was like, why is that so cheap? And the guy said, well, that's because most of the western part of that land, they can't build on it. So they have to build they can only build within a little portion of that particular land. I was like, oh, okay. And I was thinking, that's not a bad thing. You get this really big piece of land, and who cares if you can't build on all of it, because you don't want to do that. But you can you can put landscaping, you can put a little what do you call it, a little shed, that sort of thing. So no big infrastructure on it. But anyway, so it does look like there are. Oh, geez, this is very sensitive. It does look like there are some coal mines towards Chinchilla, Dalby, and I'm pretty sure they wouldn't have been affected by any sort of rainfall. Lots of mines towards north of Miles, Taroom, that area looks like, but nothing in the southeast. But then you go to the Bowen Basin, look at that. So many coal mines up there. It's interesting. Well, there's a Clyde Basin, Bowen Basin. In fact, the Bowen Basin is really long, which makes sense because you have the Bowen. There's the Bowen Abbott Point. Yeah, it sort of really makes sense. So Abbott Point is where they ship the coal. And yeah, they need to take the coal from the Bowen Basin, which is really long. Well, this is something else I learned today. So really, yeah, Bowen Basin is massive. Anyway, look, there's Southeast Bowen Basin, Southwest Bowen Basin. They have a Styx Basin. So exciting. Anyway, so I've learned something today, that the Bowen Basin is really long, really, really long. I didn't realize it was that long. Anyway, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.